Good morning, everybody. This is Michael coming to you from GammaEdge on Tuesday, June 27th. We're going to do a quick morning strategy session. The morning call PDF's been posted and the SPX commentary in the PBI channel. So make sure you reference that. We're going to start with the GammaEdge summary for this morning. Just quick notation. I was out yesterday, but did my homework overnight, looked at the cumulative tick. It still continues down. Long-term market model, we do see the red transitioning below the cyan on a couple of our models that we watch. So again, no new longs, and then possible starting of short deltas. We'll see how this plays out. We do have some supportive areas below us. Obviously, the JPM hedge at 43.20 will be coming off on Friday, so we'll kind of see how we handle those areas. I am not going to be starting any major new net long or net shorts yet until I see some changes in the structure still. So we'll see how that plays out, but I'll give you my thoughts here in a little bit. Transitions have narrowed significantly. Paul posted that in the PBI chart, so make sure you look at that and understand. We have all the commentary here, slightly bearish change there. 0DT folks reference this summary here. These levels will be extremely important going into today. Obviously, narrow transition. We'll look at those on the PBI charts. And then $ volume command, make sure you run that in the Discord so you'll be able to see which strikes are being targeted. Here is the PM settled. Again, as I referenced, transition's extremely narrow here. Paul's commentary was this is decisive, not necessarily less volatile, which I do agree with. So decisive means we could get a decisive directional move instead of that wide and loose, drunken sailor commentary that we've used before. So if we do get a move, it could be very decisive and directional. 43.20 obviously is sticking out. That's the JPM. We know that hedge that comes off Friday. So that, as we discussed, is basically consuming all the air in the room and taking all the thoughts and directional with it. Below 43.20, I would look for 4,300 to be targeted. We'll look at that on the combo chart. There's a significant amount of net delta sitting there at 4,300, the largest strike on the combo chart. Not necessarily the largest strike on this PM settled, but again, a decent amount of place holding there and liquidity at 110,000 contracts. So below 4,300, we'd be targeting down to 42.75, 42.60 to 42.80, and look for supportive flow. The reason we would look for support down in there is you do see these in the money calls come in that will have supportive action there. So that's where I'd be looking for demand on the downside. If we got below 4,300, pushing below 4,300 may be a little bit of a stretch today, but that's kind of where I'm watching going into today. 0DTE, again, narrow transition. This is the confluence I was discussing between all the expiries and 0DT and 1DTE. So a push above 43.50 would probably most likely be difficult. If you reference all expiries on the PM settled here, that's transition. So if we do get above transition, that would be a character change. But we do have a lot of the in the money puts above us that is going to kind of dampen that move upward. You would want to see those in the money puts change to out of the money call speculation for us to be able to move upward. So 43.50 on the 0DT may be the cap on that to the downside. If we get below that JPM area and that 43.20, I'd be targeting 4,300 and then look for supportive action to come in here. You see some of those in the money calls come in on the 0DT down around 42.85 and then quite a bit down here below 42.60 and 42.65. So I'm not anticipating us to get all the way down there today, but those would be the areas I'd be watching, kind of if this then this. Plus 1 DT, again, same narrow transition, 43.50 up to 43.60. So again, that will be difficult to push above. We see these in the money and out of the money puts basically dominate kind of above and below transition and spot price here. And then we see this 42.70 sticking out, kind of double barrel as Paul discussed, 42.60 to 42.70. So that's a confluence on the plus 1 DTE, 0 DTE, and then also the PM settled. So any push down towards here, I'd be looking for demand type price action into that 42.60, 42.70. Now, if we do see targeting below those levels on the $ volume command, then there's possibility that we do move lower. I'm not anticipating that. I'm not anticipating a large flush below this 4260 to 4270, at least for this week as the structure is at the moment. The expiry for the week, obviously we see the JPM hedge that will come off. Again, this is not liquid, but everything around it, it just pulls everything to it like a magnet. So I would anticipate some sort of move down towards that 4320, depending on what the structure looks like. Again, overhead progress is going to be kind of stifled and dampened because these puts above us, even all the way up to 4375. But we see that transition again that comes across for all those expiries and all those charts at 4345, 45 to 4350. So pushing above that may be difficult. We do still see a large amount of liquidity at 4375 and 4400. So even if we push up, I think it's going to be difficult even to get above that. So same areas to the downside. We see these calls come in roughly starting below that JPM hedge and then all the way down. So this is still supportive type demand action with these calls below us, these in the money calls. If these in the money calls start to evaporate and fade away, then that would lead us to a little bit more propensity for downside if the puts are being targeted down here. Here is the combo complex. Quickly you're drawn to the 4320, the amount of liquidity there, net delta. But then if you look at 4300, we have 37 billion net delta sitting there, so 400,000 contracts. So this is going to take a massive amount of absorption to get below 4300 and then stay below 4300. And then you see these in the money calls coming in, decent amount of net delta and contracts down here, 4275. That's why we referenced that, 4280. And then even down to 4250, and then obviously 4200 would be a stretch to the downside, at least for this week, but that's beware targeting. And then dampened move to the upside because of transition here and some in the money puts being here at 4365 to 4370 there on the upside. And you see the transition a little bit wider on the combo complex, but still fairly narrow for the whole structure there. So we're talking about this spreadsheet here and becoming put dominated, so you can see the transition between red to yellow to green and then back to yellow. So basically this is just cautionary in the overall structure. We see that puts start to dominate, which could lead us to the downside. You see this over here on the net charm. And then you see this here on the left-hand pane and right-hand pane that are labeled here. So when out of the money and in the money puts start dominating, we look for a little bit more move to the downside and a little bit more cautionary and less probabilistic move to the upside. Paul, we posted the landscape view here. So then again, same areas we're talking about, JPM expiry, basically just the large bar and consuming everything here. We do still see plus Gex at 4,500 and 4,400 being targeted above us. So the out of the money call speculators are still present. If this completely starts to erode away and we see this drop in this landscape view, then obviously we would really start targeting a little bit more to the downside. That means these out of the money call speculators are not anticipating any upward movement or price towards that direction to be able to capitalize on that. So basically they've thrown in the towel, and then that would lead us to a little bit more downside. But as you can see, really the downside is not growing that much also comparative to the upside. So it's pretty well balanced, at least in this structure, after we get rid of this JPM hedge. So we'll kind of see how that positioning comes in. A lot of times when we see the JPM roll, we see copycat traders come in and position around the same areas as JPM. So we'll see how that plays out into next week. So really well-defined transition here. We see that 43.50 and then drops off here. So keep that in mind as we go into today. SPY, so here's my kind of thesis today for SPY, how I'll be playing it. I've drawn out the supply and demand levels already. These are pre-market areas I marked, so the red dotted is pre-market high, or sorry, red dotted is pre-market low, green dotted is pre-market high, red line here all together is yesterday's low. So I like to mark those levels so I understand where we're at within the overall structure as SPY trades out. I'll look at the SPY charts here as Taylor gets those posted. But if we start getting above this pre-market high and this kind of supply area, even all the way up to here to 44.32, then I would look for a little bit more to the upside. If we start getting below this pre-market low and yesterday's low, then obviously I'd be targeting negative GEX down here at 430. Zero GEX is up here at 434. So we're really stuck between 434 and 430 for me at the moment. That's a little bit of a range type trade, a little bit larger range, but I would be looking for 434 to act as supply overhead, possibility to short into that level, or get long SPY versus 430, 429, depending on what the tick looks like. I'll review the tick here in just a minute. COTMP is at 429. We do see multiple times that price will undercut negative GEX, touch COTMP, or even undercut COTMP, because that's where out of the money puts become in the money. Propensity to monetize happens and is highly likely. And then you'll see that reversal off of those levels. Below negative GEX, all the strikes and deltas become negative. So you can see accelerated move to the downside below 430. Same thing we see with SPX and the liquidity stocks if you get below the negative GEX levels. So that's going to be how I'm looking to play today. I need to see us get above this 432 to 433 to play up here to 434. And below this 431.50 to 431, I'd be looking for a move down to 430. So if this, then this. Taking puts into 434 overhead, calls into 430 below, and then we'll see kind of how this plays out throughout the day. SPX, I've drawn supply and demand levels. Zero GEX here is at 43.20. Negative trends and negative GEX all right there. This is the 5 p.m. run last night when I was doing my homework. This is a transition overhead I've marked 43.40 to 43.50. We would need to get above that to target up here to P-trans at 43.70. This will change obviously with the 10 a.m. run, so let's make sure we run the 10 a.m. TradingViewer toss script and overlay those. So that's kind of how I'd be playing today. I would be looking for supportive action into 4,300 unless we really start getting targeting below. We talked about that 42.60, 42.75, and this is actually kind of a TA demand level where we had this range and then broke out of this range. So I'm still looking for this to be kind of demand supportive action in the overall structure. We do see out of the money and in the money puts starting to dominate, but we have on that combo structure that we discussed, we do still see calls below us that could provide us some supportive type action. So that's going to be how I'm looking at the overall SPX structure. Daily, we've had basically a 3% pullback from the high. I discussed that in the voice chat last night. Not out of the ordinary after a 13% run and range breakout from the bottom. Now, does this morph into something more and a stronger pullback down to 4,200? Possibly, right? We don't know. That's all to be determined. So we'll watch the structure and we'll look at that day over day. But as of now, I'm just looking as this is a pullback in a extended move to the upside. Watch the liquidity stocks. They were extremely extended. They're getting nice pullbacks. But we'll see how this plays out. Obviously, the CT tick. The CT is showing railroad track to the downside. The red is starting to slope to the downside. Paul did point out, which I looked at last night, is this may be starting to consolidate and level off here and go sideways. So from consolidation, we see expansion. So we'll have to see how this watches. Our first step would be to start seeing the white bolded lines start moving above these short-term moving averages and then propensity to move back to the upside through this colored ribbon. But we need to see that structure change to start looking back to the upside. The tick US looks slightly more different, slightly different than what the tick ARCX does there. We do see the red moving below the cyan, which is a risk off in our market model. So again, watch the new highs versus new lows. This is extremely important. If we're going to move to the upside, we do need to see new highs outpacing new lows, and you'd want to see this bolded white CT line start moving back to the upside. So my preferred setup for me would be a move into the JPM hedge 43.20 to 4,300. I would see this tick start to consolidate and level off, start moving back to the upside and moving back above those white moving averages, and then price start to level off, consolidate, and start moving back the other direction if I'm looking for the upside. Anything below 4,300, I will be a little bit more risk off depending on what the tick looks like. If it's still railroad track down, then I would start looking to become short deltas and for a possibly move back down to this 4260, 4270, even maybe this gap fill at 4240. So that's my thesis for today. If anybody needs anything, let us know. Hopefully that helps. Review the morning call PDF. Understand where we're at in the overall structure, where the level's at. Make sure you manage your risk. We are a little bit more risk off at the moment with the CT structure and the transition that we're seeing in the overall structure. But again, this all to be determined. Is this just a normal pullback from extended move up in the SPX, or does this morph into a little bit more and we really start seeing some targeting to downside, maybe back to 4,200? So, all right, that's all I have for this morning. Hope that helps everybody. We'll be in Discord answering questions here in just a minute. I see Paul and Taylor logged in, so thanks everybody. We'll see you in a minute.